of your FICO. 760 and up, you know that's life goals. If your credit too low, walking on the tightrope. So yo, credit up, get your credit up. Credit up, get your credit up. Credit up.
You got to think about where are you going to be 5, 10 years from now, because time is inevitable. Like, time is going to pass us by regardless of whether we like it or not, right? But growth is optional, right? So whether you want to grow your money and how you want to grow it, that's totally up to you. A lot of times we go for the quick fix and flip or the quick cash that we can get, but that's not how wealth is built. Wealth is built in the long term. So for me, I invested with you. I'm not even worried about it. I'm thinking 5 years from now, 10 years from now, right? That's my mindset, because I'm like, if I can make this money, invest, in 10 years from now, look up and see how much equity I done built, right? And then we have to understand financial literacy. In our community, unfortunately, we don't understand 8% return, 10% return. All we know is I want to double my money. You know what I'm saying? I put in 5, I need 10. I put in 10, I need 100. Like, it don't work like that. Because if you understand percentages and financial literacy, if you go and put your money in the bank, the same $10,000 that you may have sitting in your bank account, if you go keep it in the bank, you're talking about 0.01% versus investing in a vehicle where you're going to get 8 to 10% return on your money plus equity on the back end as the property grows in value. So you got to understand the opportunity cost of your money here, and this is what I try so much to explain and educate, and this is what keeps us from elevating as fast as we want, because we stuck on the quick. We want the quick. Oh, nah. How long is it going to take for me to make my money back, right? And then you look up. So for me, this is my goal, bro. My goal. I'm 30 years old right now. I'm giving myself 10 years, right? I'm saying by 40 years old, I want to get to the point where I have my own private money lending firm. I want to be the lender, right? So how many assets do I need to buy? How many life insurance policies do I need to buy? Where do I need to park my money so that in 10 years from now, I can now have all of this equity, borrow against it, and then just lend out money.
So,
you know what I'm saying? And now make interest on my money.
Let me make that one easy
that's
for
my goal.
Let me tell you what the private hard money companies do, right? And like, we're working on something. So the hard money lenders, the reason why they lend 65, right? Most of them, not only do they borrow from other folks and give it, so they lend to us at 8 to 10%, they borrow and give back to other investors at 6%, which is a good return for somebody that's got a retirement account sitting somewhere it's not doing anything. But they also can leverage your property with the bank through a line. So let's say you find a self-storage unit, right? And I'm the hard money lender. Your self-storage unit is worth $10 million. I'm going to lend you $6.5 million, which technically the bank is lending. I get the money from the points. Anything that's different that the bank needs, I'm going to make you bring it down. So that 65% rule doesn't come from some things that come straight from the bank. That's what they give to the hard money lenders to lend to us. The hard money lender then has to guarantee it, but you brought down enough money where the hard money lender may be in it at 50, 55%, and you bring down another 10%. Oh, it's a simple. I mean, you just got to get the table. So normally crazy. It's not their money. Normally it's somebody else's money. So normally when I first started, it used to come from all these different IRAs, right? And it still does. I've seen a lot of them, the back end of it, they come from IRAs or private lenders, true private lenders, not these hard money lenders that say they're private lenders, but true private lenders where you sitting around with 100K and we say, you know what, go lend this out, bring me back 10% a year, right? And I don't have nothing to worry about. I got the first mortgage. If something happens, we foreclose, right? Because we're in a very good position. So the essence of the business is getting other folks to fund your hard money company, which is, something like I said, we're making sure we crossing all the T's and dotting all the I's, but that's coming soon. But we can sit down, man, and just, I want to make it as easy as possible for you. So, into that learning curve that I have, you got it already, bro.
Yeah, we need to sit down, because that's my goal, and you just simplified, because I didn't know that essentially they're just being a middleman. That's essentially what they're doing. You know what I'm saying? So pretty just being able to pull the money from different sources, get theirs in between, and just manage that whole process is just it's crazy. It's bill syndication.
People how to go out and get $50, $100, $200,000, zero interest the first year. Imagine this: you taught 10 people to go get $100,000, 0% interest the first year, and you go out there, you say, you know what, I'm gonna lend it for 6 months at 10%, and you do that every